Welcome back to the channel. On today's episode, we are going to cover a ALTA settlement statement, the buyer side and the seller side. And this isn't often covered, so I love to give real life examples. I do this all the time in our monthly meetups in the DMV area, which is Washington, D.C., Maryland, and Virginia. So happy to share this with you today. And I know when I got started, I always really had a lot of questions on the ALTA settlement statement, all the closing costs, because when you do these settlements, seller pre-sign or buyer signing or even a refinance, the closing cost section, if you're going through it and they want to cover it line by line, they're going to have questions, and it's challenging when you're first getting started because there's so much information you don't know yet. So that's why we always encourage taking training courses. On this channel, we recommend Mark Will's loan signing system. If you love the channel and the content, feel free to sign up there through our link in the description below. That always helps us out to create more notary content. But with that being said, we're going to get right into it. So in this example, we're going to go over the seller side first, like we're sitting down and doing a seller pre-sign, and then afterwards, because it'll go quicker, and then afterwards we're going to go through the little bit longer buyer side as a buyer only, and we'll go through all the common questions I normally hear at settlements. I'll cover the standard answers I give, so you can feel free to cheat and write those down and use them at your next settlement. So my goal is that I am giving you value for this content so that you can use this to get better in your notary journey if you're a beginner, or even if you're intermediate. If you're not doing settlements in 30 minutes or less, or 15 minutes or less as a seller side, you can probably benefit from this training. With that being said, let's get into it. So I have in front of me an ALTA settlement statement. And some people ask, what does ALTA stand for? If anyone, sometimes the buyers will ask this. That just stands for American Land Title Association, as you see up here in the top left corner. All right, so as far as everything else, you see all these black boxes. I've redacted a lot of the information, obviously, to protect the borrowers and the sellers and the property address, all title company, all that is blacked out. So that's, if you're wondering why you see that, that's why it's redacted. At the top, normally you're going to see the file number right here when it was printed. You also see that in the bottom of each page. The settlement location, which is usually going to be the property, the realtor's office, or the title company most of the time. And then the actual property address is going to be right down here. Title company's up here. Now in this example, I didn't black out the city just so you have a reference of what state this is and what city it is. It's closing in Ocean City, Maryland. Now if you're not familiar, Ocean City, Maryland is a beach town right on the Atlantic Ocean. It's a wonderful escape for people that can drive to it in the DMV area. Typically not that far because Maryland's a small state, and I love going there with my family. And they're buying this property in Ocean City, Maryland. It's actually a condo, which you'll see a little bit later, and that way they can go vacation as a second home or a rental, whatever they want to use it for. That's up to them. Borrower and seller's names are obviously redacted here, so you see that blacked out. And then the lender in this case is Waterstone Mortgage Corporation. They are out of Wisconsin. Next, we're going to pretend we are doing a seller pre-sign. So obviously we're meeting with the seller. We've introduced ourselves, let them know we're going to be covering their closing costs. Now at the beginning of this settlement, I'm going to ask the seller, have you had a chance to review the ALTA settlement statement? Number one, I start with this document because this is the document. If there's going to be any issues, it's going to be right here in the number. So always start with this document, or if it's a refinance, start with the closing disclosure. But either way, start here, because if there's any numbers that are wrong, they'll come up here, that we don't waste your time going through everything and then having to redo it or having a refuse to sign situation. So starting here, and I ask them if you had a chance to review the ALTA settlement statement, and the answer is no. I tell them, hey, no worries, we're going to cover it right now in detail. Sit back, relax, we'll go through it. Now, oftentimes their realtor is there, and if the realtor's there and they've reviewed it, I say, great realtors will always review this ahead of time with their clients and walk it through them. I'm just going to cover it, and stop me if you have any questions as we go through it. Okay, great, perfect. All right, Mr. and Mrs. Seller. In this case, it's one seller. So Mr. Seller, in this case, you're going to see debits and credits on your side of the page. Now the buyer side is over here on the right-hand side. Ignore that side. It does not apply to you at all. Don't worry about that side. So left-hand side only, because oftentimes they'll drift and look at the right-hand side and get actually confused because they're thinking stuff on the buyer side somehow applies to them. It doesn't. Most of the documents are blind documents. This is one of the few where you can see both sides, and not every title company will give you this version of the ALTA or HUD. Sometimes they'll give you a blind HUD or blind ALTA where it's just one side, the seller side only, or just the buyer side only. Especially with attorneys, they often prefer that for liability reasons and preferences. They'll block out one side or the other. All right, Mr. Seller, so you're on the left-hand side here. You're going to see a list of your credits, money coming to you, and your debits or your expenses or your costs. All right, so we're starting at the top. Sale price of the property of your condo condo is $405,000. Shouldn't be anything new. Under prorations and adjustments, you're going to see 2 credits for the county property taxes to Worcester County that you already prepaid, as you can see, from today's settlement date of the 20th of February to the end of the tax year, the fiscal tax year, June 30th of 2024. You already prepaid these with your escrow account through your mortgage company, so these are coming back as a credit to you. And then right below that, you've also already prepaid your condo dues for the year. It's once a year annual. You've already paid them. Again, what you've paid is coming back as a credit because that's no longer your responsibility. After the 20th, it's now the buyer's. So all this is coming back as 2 credits. So good for you. And then right below here, we have our first expense or debit, $350 for your water escrow. Now, if you're not sure what a water escrow is, it just means that there are water bills due monthly on your condo, as you are aware. And just to make sure that you pay what you owe through the closing date, we have this money set aside temporarily for a short period of time so that when we get the next water bill, which may be March 1st, March 8th, after closing, and you owe some water up through today, the 20th, we want to make sure you pay what you owe, but we don't have the bill yet. So we have to set aside this amount of money just in case. That way, if there's a water leak, because often they'll say, well, why are you collecting $350? Normally my water bill on my 1-bedroom condo is, $40 or $30. Well, Mr. Seller, usually it is a small amount, you're correct, but occasionally what will happen is there'll be a leak at the property. And oftentimes if that happens and it's a very large water bill, all of a sudden, once you've been paid and you've moved on, trying to track you down for money is a challenge. So the title company is collecting a larger amount than they probably would ever need, just in case. That way, if there is that incident and there is a leak, they've got money to cover it. So that's why it's so high. But again, it's just temporary. What will happen with your water escrow is that once the buyer has moved in and we get that first water bill and they send us that water bill, or you send us the water bill, if you get it first, please send it to the title company. They will pay what you owe prorated by the day through today's date, settlement date, only what you owe. And then the rest of that $350, which is probably most of it, will be sent back to you as a check to your new forwarding address. Is that cool? Fantastic. And then later when you go through the seller documents, you'll verify that you do have Mr. Seller's new forwarding address in this case. That way they know where to send that check. And if they don't know yet, that's okay. Let them know that's okay because they'll follow up once we get the new water bill, once you have maybe a new permanent forwarding address. Because sometimes people don't know where they're going to move. They may be, staying in a hotel with family, friends. They're not sure yet. They may be renting. It's still up in the air, so put them at ease. And that's it on page 1, Mr. Seller. Not a whole lot going on. And then page 2, we'll scroll on down. Okay, so under this section here, you'll see a title charges and escrow settlement charges. So these are title fees, and you have 2 of them. The first one for $350 is to prepare and obtain the mortgage release. So what is that? So you have a loan on the property, right? If you scroll down a little bit farther, guys, just to see it, there is a loan to Chase Bank against the property currently. The mortgage that the seller owes is right here, the payoff amount, $138,133.49. So yes, you have a loan to Chase, and to get the mortgage release, we have to communicate with the bank. So the title has to communicate. So this is the title company's fee to obtain that mortgage release. And the release of mortgage itself is that document that gets recorded by the title company in the county of the property that you have paid your Chase loan off in full and that you no longer owe them. Title is clear. And we need that so we can give the buyer clear title. And then next is $45 for the release tracking to Require LLC. Require is just the company the title company uses to record that release of mortgage at the county level on your behalf. That's it. Pretty straightforward. Now a little bit farther down. Now, FYI, occasionally I have had some people push back because title companies will charge anywhere typically between $200 to $400 for this. And some sellers that are a little bit on the pickier side or stingier side will say, my gosh, that is crazy high. Now, that's not my role as the closer to comment on whether that's a high fee or not. Personally, I think it's high. I'm not going to share that ever because we're not hired to give opinions, right? But I will, however, let them know that, yes, that is the title company's fee. Now, if they're giving us pushback and they're concerned and they're asking, why is it so high? I can't answer that as a notary signing agent. However, I'm sorry, I can't really comment on why the fee is $350, but if you want, I would be glad to call the title company up, put them on speakerphone and maybe get you to speak with someone if that works for you. And usually that will solve the problem. I'll call the title company, put them on speakerphone, let them have the conversation. And, usually the answer is the title company's like, it is what it is. That's our fee. Deal with it. But at least the onus is off of me. The responsibility is now on the title company where it belongs, and they can explain that. That's the same thing in any fee. You're not there to explain fees. You're just summarizing the documents, pointing things out to be helpful. And in that regard, you want to get clarity from the title company if the seller has an issue with that fee. Next, Mr. Mr. Seller, under commissions, you'll see the 2 realtor commissions. You have your agent, the Coldwell Banker listing side of things, their commission on the sale of the property, and then the buyer's agent, Northrop Realty, through Long & Foster, their commissions, and that commission amount is whatever percent you agree to when you went under contract. Oftentimes, it's usually 6%. In this case, it's $22,275. So if I pull up the calculator, $22,275 divided by that purchase price, which I believe was, $405? Yep. So that is 5.5%. So, and usually sometimes I'll do this math ahead of time before I go to the closing. That way, when I get here, I just say, hey, Mr. Seller, the commission to the buyer and seller agents involved is 5.5%, just like you agreed to when you went under contract. And that's it. Now, sometimes you will get some pushback here because the listing agent on the seller's side will tell their client, the seller, that yes, the commissions is going to be 5.5%. And the seller is cool with that. But they don't understand that the 5.5% is split between both of the agents. So sometimes that's lost in the sauce. So, that's where if they're agents at the table, they'll just say, oh, yes, 5.5%, like we agreed to, but it's split between the 2 agents involved. Because the sellers don't understand that's usually how it works, because the buyer's agent is bringing something of tremendous value. They're bringing a buyer to get the deal done. So that's why it's on the seller side traditionally, unless it's negotiated otherwise in the contract. But normally, at least in Maryland anyway, in Maryland specifically, the tradition is that it is on the seller side for both. Now that may vary state to state, so be aware of what it is in your state, what is normal to occur. And then right below that, Mr. Seller, is the commission flat fee to your Coldwell Banker agent, and that's $480. Now the sellers will sometimes not know what this is or why it's there, and they'll say, well, what is that? And I just tell them, well, Mr. Seller, it's a flat fee because your real estate agent's broker charges a flat fee per transaction, and that's what that amount is. It's also already in your contract that you agreed to and signed already. And the reason that's there is typically because the brokers that are hanging the licenses of all the realtors underneath them at their brokerage office have a lot of overhead. They've got the office, they've got training, they've got electric, they've got licenses and training to maintain annually. There's a lot of money that goes involved in opening and maintaining a brokerage. So this per transaction fee helps put keep the lights on basically. So that's why they have it. It's going to vary from brokerage to brokerage. Sometimes I see as low as $295, as high as $700 some dollars, but somewhere in there is usually traditional in Maryland for the flat fee. Now, oftentimes the agents will also eat that fee so the sellers don't have to pay it, and they'll have it reduced out of their commission because they're really close with their seller, or that helps get the deal done, or for whatever reason. So you'll see that sometimes as well. So it may not be here, but it might be reduced out of the seller's listing agent's commission on behalf of the seller. All right, Mr. Seller, we're almost done. Government recording and transfer charges is the next section. So these are the transfer taxes that the local county and state charge whenever there's a transaction, whenever there's a real estate sale. They stick their hand out and they want their cut. There's nothing we can really do about it, and it is what it is. And you'll see that here. The county, Maryland County transfer tax to Worcester County, and the state transfer tax to clerk of the court. And that's usually based on the percentage of the purchase price. So in this case, it's about $1,900, which into 405,000 is 4.69%. So it is what it is. It's going to vary state to state. It's lower in Virginia on the seller side. It would just vary, but you need to know this in your state that you're operating in, what the normal amount is. That way when people are like, well, why is this here? It's because that's the rules that they charge for transactions, for real estate transactions. It is what it is. Not much you can do about it. And then right under here, transfer tax to Worcester County. So they're like, well, why is there county and transfer tax? Usually at the county level, there's a transfer tax as well as a recordation tax. And the transfer tax goes to the transfer tax department, and the recordation tax goes to that department. So it's 2 different departments in the same county. So that's in here as well. So again, it will vary state to state. Know what is normal and common for your area. But these are the transfer taxes, Mr. Seller. And you'll see in Maryland, it's traditionally, again, know your state, but traditionally split between the buyer and the seller. So usually when I'm pointing this out, I'll let them know, Mr. Seller, yes, these are the transfer taxes to the county and state based on the purchase price. You and the buyer are splitting that, as you can see here on the right-hand side. Now, side note, if you're a Maryland notary watching this and the buyer is a first-time home buyer, there's actually a state transfer tax credit. So if that was the case and this was a first-time Maryland home buyer, this $1,012.50 to the state would not be here. It would be a zero balance or blank. But again, that's just a side note for you Maryland notaries. Perfect. And then, Mr. Seller, we also have your payoff to your lender, Chase Mortgage. Now, this is important, guys. So if there is a mortgage payoff, it will be listed here, and that is going to include daily interest from their last mortgage payment up and through today's date, February 20th, the closing date. The common question the sellers will ask you is, do I make my next mortgage payment? In this case, closing is occurring February 20th. Their next mortgage payment is probably due March 1st. The answer is no, do not make that mortgage payment. first off. Now, this is usually pretty obvious because we're closing February 20th. They know that. They're probably not going to make a payment March 1st. However, let's say this closing date was February 1st, okay? They're going to ask, do I make my February mortgage payment? When it's more close to the time it's due, this is when there's more of a concern because the sellers are like, hey, I don't want to have a negative credit rating on my history 30 days late. So that's why I have to let them know, look, the payoff is going to include your last mortgage payment, whatever that was. When was that? In this case, it was February. Great. February 1st. Fantastic. And the 20 days of interest between your last payment and today, that's already baked into this payoff right here. So do not make another mortgage payment. If you have auto pay set up, feel free to disconnect that, but do not make your next mortgage payment. It's already baked into your payoff here. And now the problem is, let's say the closing date today, as we're filming this, is February 1st, as I mentioned, and they have auto pay and it's already been sucked out of their account. What do I do? Well, if that's the case, which occasionally this will happen depending on timing, and if no one told them to disconnect auto pay, it's okay. Don't make it a big deal. Always calm and professional. If it came out automatically, no worries. That just means that if you've overpaid the lender, whatever you've overpaid them, Chase will have to refund that to you. And also, if you have an escrow account, which in this case you probably do, maybe not, but either way, do you have an escrow account? Fantastic, Mr. Seller. Chase will also refund you whatever's sitting in your escrow account because that's your money. They'll refund that to you as well once they've received this payoff. So that way they know, okay, number one, I don't make my next mortgage payment in March. Number two, I can disconnect auto pay if I want, makes me feel better. And number three, I'm expecting a refund of my escrow account if there is one in this case, because that's going to be refunded after they've received my money. And they also, the lender has, fun fact, by 30 days to return that to the seller after they've received payment in full. So I let them know that too. Should be within 30 days of them receiving the payoff whatever day they receive it by law. And that's it. And then at the bottom, if I keep scrolling on down, Mr. Seller, that's all of our credits and expenses. So the fun part, how much is coming to you due to the seller. The title company is going to be sending you $242,646.46. That's a lovely payday. Congratulations. There's a proceeds form later in the packet. We'll fill that out whether you want to wire directly into your bank account or if you want, or to your brokerage account or as a check, whatever your preference. They don't do pennies, they don't do cash. So check or wire, whatever your preference. We'll fill that out at the end of the seller documents we're about to get into. Any questions on your settlement statement? Nope. Fantastic. Okay, we've answered them all. We've been very thorough. Okay, Mr. Seller, I need you here on the last page to sign your name here and date, and that is it. Now, my newer notaries, you'll see on the settlement statement, there's a spot for the escrow officer and the date. 99% of the time, you are not going to sign here because you're not the escrow officer, the settlement agent, or the title agent. Occasionally, you will be requested to sign and date this and give to a realtor and copies to the realtors that are at the closing so they can get paid faster. But typically, that's not the standard. That's not the norm. If you're asked to do that, that's one thing. But normally, the expectation is this part is escrow officer is not signed by you because you're not the escrow officer. But you do want to get the seller's signature and date and the buyer's signature and date. So hopefully that has helped you on the seller side of things. And we're going to jump into the buyer side. This one's going to be longer than normal because I'm very detailed, but I hope this helps you. So again, fast forward if you're just focusing on seller. First part of the video, if you're focusing on buyer. Second part of the video, I'll put a couple timestamps in here so you know where the difference is to make that easier on you. All right, so now we're going to go through the buyer side. So go a little bit faster just because we covered some of the basics, the preamble. But the buyer side, same deal. Have you seen this document yet? No, I haven't. No worries, we're going to cover it. These are the same closing costs you've seen on your closing disclosure, assuming there is a loan. If there's no loan, it's a cash purchase, there is no closing disclosure. But assuming there is a loan, which is most of the time, the same closing costs, just a slightly different format. This is the title company's version of the closing disclosure. And here we go. So your expenses are right here, your debits, and your credits are here on the right. Mr. Buyer or Mrs. Buyer. Sale price of your condo, $405,000. Your two credits are your earnest money deposit of $15,000 you gave at the beginning of the transaction when you went under contract, and the loan amount, the new loan amount of $303,750. Now scrolling on down here, under prorations and adjustments, county taxes are due because today, now your condo, taxes are due for this current tax year, the 2023-2024 tax year, which ends on June 30th. So we're paying them right now because they're due. Same thing with your condo dues. Those are due once a year. Those are due right now because we're in the middle of the year. We're paying that right now so that you are caught up. And obviously on July 1st, you'll be paying the following year's condo dues. The condo will let you know how to pay them well ahead of time, but that will be separate from your mortgage payment. That's not going to be rolled in. It almost never is rolled in, but obviously check the closing disclosure. But in most most cases, it's never rolled in. That is a separate monthly or annual fee or quarterly, depending on the condo. Every condo is different. The county taxes, however, when they're due July 1st, no worries. That will be part of your escrow account of your mortgage payment. We're going to get to that in a second. Scrolling on down, Mr. Buyer, excuse me. The loan charges. So these are your lender fees. You've already seen this on the closing disclosure, but I'll just reiterate them once again. Your points right here, that's to buy your interest rate down. Your admin fee to the lender, processing fee to the lender, and your underwriting fee, all again to Waterstone. That's their fees. Prepaid interest. So we're closing in the middle of February. So the lender wants daily interest. So today's February 20th to March 1st, the partial month of February, they're collecting that interest right here. And then you're going to live in the property all of March. And then you don't make that first mortgage payment until April 1st, which is awesome because today's February 20th. So you got a month and a half, no mortgage payment. Nice. Now, you also have until the 15th of every month to make that mortgage payment penalty free. If you're a first time home buyer, most of you are nervous about that. So you can also set up auto pay to pay every month coming out of your checking account automatically. You can set that up as well. Moving on, other loan charges. So you have the closing protection letter to Title Resources. That's ordered by the lender. That's part of the lender's title insurance to protect them. And then right below that on page 2, got the credit report and flood certification. So that's them checking your credit, verify everything is looking good. Flood certification, that's where they just check the flood map to make sure your property is not in a flood zone. It is not in this case, so we're good. Next, your impounds. Impounds just means the same thing as escrow.